Okay, we are still here with Chamath Palihapitiya, founder and CEO of Social Capital, CEO of 8090, host of the All In podcast, and we haven't seen him in a while. We used to see you
Working
quite a
on
bunch.
My own distribution.
I know.
I had to build my own distribution.
I know you've got your own distribution now, but you did come on a whole bunch during the SPAC craze.
I didn't have my own distribution then.
And I want to ask you this, or maybe I want to read you this. We got a whole bunch of people tweeting at us. Pretty rich that Chamath has an issue with the game when he was the SPAC king and playing the game. So I'm curious, when you go back and think about...
What does that mean? What do they mean when they say that?
I think what they're saying is there was a period of time where you sold a lot of SPACs. And that
No. Let's...
promoted a lot of SPACs as the partner in a whole bunch of SPAC
totally.
projects.
Yeah.
And the truth was that a lot of those SPACs ultimately didn't work for the investors.
Hold on. No. They did not work for speculators, but they worked for the CEOs and they worked for the employees. They worked for the customers of those companies. I mean, like, I think
But for the investor class that was buying on the other end.
Hold on. Let's not call them an investor class. Okay? There were a ton of well-heeled hedge funds that were my partners. They made money. Who didn't make money? Speculators. Now, do I feel bad for them? Yes. Were my incentives misaligned with them? Also, yes.
Well, we used to debate this.
Yeah, but those are, and I can evolve and see,
right.
And I can say that's a fair critique. But it's also pretty rich for folks to just sit and chirp on the sideline without saying, well, how much money did those companies raise? The answer is tens of billions of dollars. How many clients or patients or customers do they serve? The answer is millions to tens of millions. How have they grown revenues and traction since that happened? And the answer is, in some cases, doubling and tripling. So if you want to take a fair look at it from a 360-degree view, there were some parts of it that worked. And the part that didn't work, I went out of my way to relaunch a SPAC just to show you how I can address the speculator class. Because it always worked, for, I think, for the entrepreneur. And
there's no question that the SPAC process was good typically for the entrepreneur and invariably maybe even good for the company and employees. I'm not arguing about that. I'm arguing that, and I think anyone who was watching at some points when we used to talk about these things.
I completely agree with the point. I agree with that.
And they would say, look,
it didn't work for them.
You told me this was going to be a great thing.
It may not work
stock...
again. By the way, it may not work again. But at least this time, the way that I structured this second time, let me maybe just take a step back and talk about why do I do this? I'm running a tech company. I don't need to do it. Why do I do it? I think the through line for me is I don't like it when I see markets that are gate-kept by a few people. I don't like it. It bothers me. And my entire working career, if you actually say, what's the through line from Facebook to now, I tend to go after markets that need democratization. Whatever, that's an overused, jargony term. But Facebook was democratizing information. Social capital, I democratized a lot of investment, okay? The SPAC was, I didn't like the idea that 2 or 3 banks sat as the gatekeeper between companies that should be funded and exist and their ability to actually serve customers. Because what happens is, and you can see it in these banks' earnings, and I'm not saying they're doing anything wrong. They're doing something totally legitimate and right. But at the end of the day, those folks structure liquidity for companies based on their ability to embed gains to their best customers. That's the game. So if you hear that OpenAI cannot go public this year, that has nothing to do with OpenAI. That has everything to do with who is lead left and who is lead right, deciding how much embedded gain they can transfer to their best clients. My point of view is find a different way. There are many different ways. Direct listings are a way. SPACs are a way. Reverse mergers are a way.
But if you could go back in time,
yeah,
do you think you would have done the SPACs again the way you did them?
The thing that I would have changed is I would have had nary a comment on Twitter. I would have not come on CNBC and talked about them at all. That was a huge mistake. And at the time, I think I was also learning about the influence that I had, and I was kind of learning to deal with it. I think 6 years later, 7 years later, the 2021 me versus the 2026 me, the 2026 version of me would say, we don't need to say that. We don't need to say anything. In fact, let's just be very clear. Everybody stay away. I'm doing this because I have two very specific goals. One is,
And you're talking about your current project.
Yeah, well, the SPAC that I did now has two very specific goals. One is just to create an architecture that I hope people copy, which is you cannot get paid unless the stock goes up, do it over time, set huge goals in the out years for performance. So now there's complete alignment. And the second...
And you're locked in.
Yeah. And the second, which is much more practical, is I look at the United States and there are these huge gaping holes where companies need capital to do very important things for the United States that they will not be able to get because they do not check the obvious box for the gatekeeping banks. And unless you fix that problem, you are going to have a serious problem on your hands.
But Chamath, it just sounded like you said, look, I want to raise money for the companies and I want the hedge funds to do good. And hey, these speculators, they're speculating and they lose their money all the time. They should just, buyer beware. They should have known they were going to lose their money. That's what it sounded like you said.
I think that I should have been much more circumspect and said nothing. Nothing. Right. And this time you'll hear me say nothing.
Was there a way that they could have gotten a fair shake along with the hedge funds and the companies?
I think that is, again, the structural things that need fixing. So the next version after this version that I would hope somebody does is they just post all their own money. So like right now, the way that the SPAC works is that you post a little bit of it and you still need to raise from outsiders. But I've talked to Paul Atkins about this. I'll post the hundreds of millions of dollars. Now it's a turnkey IPO. It's all my risk. If I find something I like, I'll just underwrite it. I'm giving that company the hundreds of millions that they need, and it should go public. That kind of stuff, where there's all of these folks who could then do that and copy that. All the hedge funds could do it. All of the, the big buy-side organizations could do it. That could be a really important thing for what we need to happen right now, which is more companies should be public, not less. And more money should go into critical infrastructure, not less. And right now, if you put a handful of financially motivated actors in the middle of that, you are going to see...
Should they go public earlier?
Yes.
Yes.
Yes. Transparency is better. Yes. Absolutely. Performance pressure is better. It's all better. There is no version of this example where staying private forever is rewarded over the long term. Somebody will get screwed at some point.